Molly is a small company listed on the JSE Securities Exchange. The trial balance of the company as at 28 February 25 is shown below. Good. They have debit credit, sale of goods. Now, obviously, that is our sales, and according to IAS 1, we don't call it sales anymore. We call it not income, revenue. Revenue. Goods. Then we have revenue, which is the sale of our trading stock. Then we also have an additional income stream, which is rendering of services. Now the revenue, i.e. the sales, that goes together with cost of goods sold. And cost of sales or revenue less cost of goods sold or cost of sales equals gross profit. So that rendering of services, that is another income stream. And that we do not group together with our revenue figure, with our sales figure. So that rendering of services would be other operating income. Good. And that is 140,200. So which is important is that you know that we're not going to add the 140,200 to the sales revenue. Dividends received, interest received. Now dividends received usually will be investment income. Here in number 4, they tell us that dividends received was from Clinton C Limited, a listed company. So very clearly investment income. Now IAS 1 states that we have to show investment income separately. So this is investment income from listed shares. Right. Interest received. Now we have number 5. Interest received was received from MCA Pty Limited. Now a Pty Limited is the indication it's a private company. A private company cannot be a listed company, but I can have an investment in a private company. And that would also be investment income. So investment income then has 2 legs, one being out of listed shares and one out of unlisted shares. Profit on the sale of equipment. Now that is also income. It is not part of revenue, and that will also be part of other operating income. So those two will be grouped together in my statement of profit or loss and other comprehensive income as other operating income. Cost of goods sold, it was cost of sales, distribution cost, administration cost, and other expenses. Very clearly, it's a function of expenses method, and you know that each one of them have a separate line item on the income statement. Then we have share capital, retained earnings, dividends paid. Please do not put dividends paid in the income statement. It does not appear in the income statement. If you're going to put it in the income statement as an expense item, -2 marks straight away. It is something, it is a distribution to the owners, the equity holders of the entity, and therefore it should be shown in the statement of changes in equity. Vehicles and office furniture, investments, accounts receivable, raw material work in process, and finished goods. Clear indication, it is a manufacturing kind of environment. Long-term borrowings, bank accounts payable, land and buildings, and then they give us additional information. You are required to prepare the statement of comprehensive income of Molly Limited for the year ended 28 February 25 in conformity with the International Financial Reporting Standards. You have to prepare the accounting policy note for property, plant and equipment. You have to prepare the note on profit from operations. Now this one, profit from operations, is my profit before tax note. It's the same note. Good. Let me type it out. Prepare the note on investment income. I've just spoken about that. And prepare the note on long-term borrowings. So let's start then with the income statement. The name of the entity, Molly Limited. What are we busy with? The statement of profit or loss and other comprehensive income for the year ended 28 February 25. Molly Limited, statement of profit, loss and other comprehensive income for the year ended 28 February 25. Then you must have 3 columns, and make sure that you do have 3 columns, otherwise you're going to lose a lot of marks. Note, 25 Rand, 24 Rand. And now in this question they say ignore comparative figures. However, I do not have the comparative figures, but then you indicate for me by ways of crosses that I can see that you know that there is supposed to be comparative figures. Revenue from sales, not sales. You can only put revenue as well. You don't have to put from sales. Revenue. And revenue now replaces our sales figure in the past, 8722,500. Cost of sales, of cost of goods sold, either one of the two. And that would be our cost of goods sold, 605,500. And the difference, as always, is going to be my gross profit. Then operating income, and we've already spoken about that. That would be the 140,200 and the 67,000, which we've spoken about. Not the 67,000, the 140, yeah, the other, that one, the profit on sale, the 67,000. 100% right. 207,200. Then our expenses, and here they gave us our expenses. In our additional information, they say distribution costs classified correctly, administration costs classified correctly, other costs classified correctly. So there's no problem in the total of the figure. All that they tell us in the additional information is what items are included on those line items, because some of them needs to be disclosed in our profit before tax note. So therefore distribution cost will be 505,300. Where are you? There it is, 505,300. Administration costs will be 436,000. There it is, 436. And the last one is going to be our administration cost. We have that one, other expenses, 48,000. So other expenses, 48,000. Now let's have a closer look to the additional information. They tell us distribution cost includes depreciation on vehicles of 82,000 rand and salaries of sales personnel of 320,000. Why do they tell us that? Because we have to show in our profit before tax note depreciation and not per allocation either of distribution or administration or other. Let's say we have vehicles, for instance. We can have delivery vehicles which will form part of our distribution and selling costs because we use that in the sales process. We can have vehicles, let's say that we have a vehicle in order to go and fetch raw materials, which delivers it to our entity. Now, if we should write off depreciation on such a vehicle, that would be classified as other expenses because it's part of our manufacturing costs. Now, if we have depreciation on vehicles, let's say, for instance, we have a pool car and our admin staff, we have, an argument's sake, an admin office in Johannesburg, an admin office in Pretoria, and an admin office in Potchefstroom. And we require some of our staff to travel between Johannesburg, Pretoria, and Potchefstroom by car. And we have a vehicle for that purpose. And we're going to write off depreciation on that specific vehicle. Then that depreciation, although it's still depreciation on vehicles, that portion is going to be classified as an admin cost. Simultaneously, if we have a vehicle that, the raw material one, that would be other operating costs. So can you see that the same depreciation, all of them is depreciation on vehicles, but it will be spread into 3 lines on the income statement. A portion of that will be distribution costs, a portion of that would be admin costs, and a portion of that will be other expenses. However, in our profit before tax note, we want to tell the reader of the financial statements what is the total depreciation that we have written off on vehicles. And in that note, we're going to add all those little components together to give them one depreciation on vehicles. So you have to understand that we are going to spread some expenses in all these line items. But when we're going to disclose the profit before tax note, we need to add that all together. We have to show employees' remuneration. Now we have sales personnel and their salaries will be included in distribution costs. We have admin personnel, their salaries is going to be in admin costs, and we're going to have, let's say, other personnel that is neither admin or distribution, and their salaries could be then classified as other expenses. So again, we can spread salaries and wages over 3 line items in the income statement. But when we do the profit before tax note, we have to show employees' remuneration. So then we're going to add all those little bits and pieces together and show one figure. Then number 2 is all about admin costs, and that includes depreciation on office furniture of 68,000 Rand and salaries to the office personnel of 312,000 Rand. So total employees' remuneration is now going to be 320 plus 312, but spread over 2 line items. One is going to lie in distribution costs and one is going to lie in administration costs. So, and then we have other costs, so let's just deal with the depreciation and the employees' remuneration. So let's do the profit before tax note. Now, in the profit before tax note, we have to do accounting policy as well. We will do that now. In the profit before tax note, we have to distinguish, again, this year, last year, Rand, between income and expenses. Nowhere in our income statement, we have separate subsections, income, and then we're going to list all the income, and expenses, then we're going to list all the expenses. Now, can you see it's just flowing from the one item to the next item. So it is only in our profit before tax note that we're going to make this distinction between income and expenses. Now let's do those two that we were talking about. Here's our employee benefits expense and the expenses. And in this note, it doesn't matter what the sequence of items is that you're going to list here, as long as you list them all and you do not list unnecessary items. So here's our employee benefits. That was the 320,000 plus the 312,000. And there's our depreciation. So depreciation on vehicles, 82,000. Depreciation on office furniture, 68,000. Here, right at the bottom. Depreciation vehicles, 82,000. Depreciation on office furniture, 68,000. Total depreciation, 150,000. But I have to show this different classes of depreciation still. Great. Other costs also classified correctly. That was that third line item that we saw there. That one. So that one was correct, that one was correct, and that one was correct. And the additional information just give us more information what was actually added together to get to the figures that they've shown us in the trial balance. So in the other costs also classified correctly was audit fees for audit conducted. Now, audit fees we have to disclose in our profit before tax note, but then we have to distinguish between audit services rendered, other services rendered, and costs that we have paid the audit fee of the audit firm. So in this case, expenses, auditor's remuneration, it was only for audit service provided, 2,500 Rand. Audit conducted. Inventory write-down to net realizable value, 4,000. Now that is a separately disclosable item in our profit before tax note. Write-down of inventory to net realizable value, 4,000 Rand. Loss sustained on equipment, damage due to floods and was uninsured. So that was a loss that we've made with the derecognition of an asset, and we have to disclose that. So that loss, 3,100. That needs to be disclosed here, loss and damage office equipment, 3,100. Operating lease, we have to show all operating lease payments, 2,920. So here we would have had operating lease photostat copy machine, 2,920. Telephone, water and electricity, stationery and postage, bank charges and traffic fines is non-disclosable items. Now listen to me carefully. You disclose it in the profit before tax note, and I deduct 1 full mark for every unnecessary item that appear in that profit before tax note. Now, it is very simple that you can go into a negative figure, because for every item that you're going to show here, probably you're only going to get a half mark. Now, if you have shown telephone expenses here, then I've wiped out 2 half marks, which was right, with 1 wrong thing, because it's minus 1 mark for the incorrect one. That is why I'm saying you have to study. Guys, this is just study. What do I have to disclose and what not? And use that illustrative set of financial statements as guideline, what you should and what you shouldn't. All the stuff that we're going to ask you will be in either that document or in one of your homework questions. So you have to do all your homework questions for in case you've missed one. Good. Directors' remuneration, that we have to disclose, and there we have to distinguish between executive and non-executive directors. So this would be directors' remuneration, executive directors, and that would be services performed as a director, 8,000 Rand. So director's remuneration, and this you have to distinguish here, executive or non-executive. For services executive director of the company, 8,000 Rand. Specialized services, let's say employees remuneration, that would be the 320 and the 312. But yes, salaries and wages for specialized services conducted by non-staff members. Guys, I cannot pay somebody a salary if he's not a staff member. So it was incorrectly posted to the salaries and wages account. That is a professional fee. Now we have to disclose professional fees, and there we also have to specify what was the kind of specialized or professional fee paid. Was it for specialized services? Was it for technical services? Was it for whatever? Consultancy services? Why did we have to pay professional fees? So professional fees, remuneration on specialized services for non-permanent staff, 6720. Right, we have to disclose the investment income note. I asked that in one of those more. There it is, number 4. So under investment income, we're going to show the dividends received and the interest received. Those two, investment income, investment income. So let me show you what it looks like. You are going to distinguish between income from listed investments and income from unlisted investments. And then you have to give the reader the nature of the income received. So from the listed investments, we have received dividends of 30,000 Rand. From the unlisted investments, we received interest of 32,800. So the two together equals 62,800, which appears there on the face, 62,800 investment income. Great. Number 6, borrowings comprise the balance of 100,000 on a loan raised on 1 June 22, long time ago, and is due to be settled on 30 May 25. Interest on the loan is charged at 5% per annum, payable annually in arrears. The loan is secured over land and buildings. Nowhere in this list of balances do they give you the finance cost paid, the interest paid. So therefore you have to work out the interest which was incurred in the current period, equals 100,000 times 5% is 5,000 Rand, and that is finance cost. Oh my goodness, finance cost. So here under finance charges, you would have shown in your income statement 5,000 Rand. Great. Now we can determine our profit before tax in our income statement. So we will start with our gross profit, add the income, deduct the expenses. That was also investment income, so we add that, and that would have given us then a total of profit before tax of 1,944,700. Now this thing has apparently disappeared. My goodness. Number 8, the income tax. And number 7, let's just read number 7. There are no components of other comprehensive income. So that's great stuff. I don't have to show then other comprehensive income if there isn't anything. In this answer, I just did show it, but it is not really necessary. income tax is 28% of the profit before taxation. You may ignore dividends tax. I will teach you what dividend tax is all about, but the profit, the taxation charge equals 28% of profit before tax. Now we have our profit before tax figure now. We've calculated it, 194,700, and our income tax expense is going to be 28% of that amount. So we multiply that with that amount, gives us 544,516, and that gives us profit for the year, which is our after-tax figure of 1.4 million rand. There's no other comprehensive income, so our total comprehensive income for the year equals 1.4,184,000. Right, the only thing that we haven't done as yet, we have to do the accounting policy note for property, plant and equipment. Vehicles and office equipment is depreciated on the straight line method at 20%. Depreciation is already calculated for you and deemed to be correct, so I don't have to calculate that. Land and buildings are not depreciated. So our accounting policy note will look like this. Molly Limited, its notes to the financial statements for year ended 28 February 25. Again, proper heading, the name of the entity in a separate line. Accounting policy note, that's what we're busy with, and then a subsection of that note, property, plant and equipment. Land and buildings are not depreciated. Vehicles and office equipment are depreciated over the economical lifespan. Methods and rates are as follows. Vehicles on the straight line method at 20% per annum. Office equipment on the straight line method at 20% per annum. So we've done that one. We've done that one. Prepare the note on long-term borrowings. Now that is all about number 6. The loan was raised a long time ago, so the outstanding loan balance at the beginning of the year was 100,000, but that is going to be settled on the 30th of May. So in the next financial year, we're going to settle the full 100,000 rand. So in that note, we are going to write the following. Now, long-term borrowings, again, 5 Rand, 24 Rand. Secured, you have to distinguish whether a loan is secured or not secured. So this loan was secured with our property. Long-term loan outstanding balance was 100,000 Rand as at the end of the year. Less short-term portion transferred to current liabilities, 100,000. So then we have to say what is the particulars of the loan. The loan bears interest at 12% per annum payable in arrears. The last installment is due to be paid on 30 May 25. The loan is secured over land and buildings to the value of 300,000. Now, if we had to do the IAS 16 note on property, plant and equipment, we would have cross-referencing that note to note number 4, where we would indicate in that note as well that certain property, plant and equipment was actually secured against a loan.